Imagine waking up every morning without the alarm clock's shrill call, knowing your financial needs are completely taken care of. Sounds like a dream, doesn't it? This dream can become your reality through smart investing. Today, we're diving into 5 transformative investments that can set you on a path to financial independence, where working becomes a choice, not a necessity. But remember, the journey to financial freedom requires knowledge, patience, and a bit of courage. So let's embark on this adventure together, exploring how you can make your money work for you and potentially never have to work again. Understanding financial independence. Financial independence is that coveted state where your investments generate enough income to cover your life's expenses, liberating you from the need to work for money. Achieving this milestone doesn't just happen overnight. It demands a well-thought-out strategy, discipline, and an understanding of your financial landscape. The first step is to calculate your financial independence number, the total amount you need invested to support your lifestyle indefinitely. This involves a deep dive into your current expenses, envisioned future lifestyle, and potential inflation rates. Understanding your risk tolerance is pivotal. It shapes your investment choices, balancing between aggressive growth and the peace of mind of steady income. For some, this might mean a portfolio weighted towards stocks or real estate for higher potential returns. For others, the stability of bonds and fixed income might align more closely with their risk aversion. Setting clear, achievable financial goals is equally crucial. Whether it's accumulating a certain net worth, generating a specific passive income stream, or simply reaching a point where working becomes optional. These goals will guide your investment decisions and strategies. Remember, financial independence is not about living extravagantly. It's about having control over your time and choices, enabling a life not constrained by financial obligations. Investment number 1, real estate. Real estate stands as a cornerstone in the foundation of wealth building, offering a dual avenue of rental income and the potential for capital appreciation. Investing in property can seem daunting at first, but with the right approach, it becomes a powerful vehicle towards achieving financial independence. There are several strategies to explore. Purchasing rental properties offers ongoing income and benefits from property value increases over time. Real estate investment trusts, REITs, allow investors to pool their money to invest in real estate ventures, providing a more hands-off approach with regular dividends. And real estate crowdfunding platforms open the door to investing in larger projects with smaller capital outlay. Success in real estate investing hinges on thorough market research, understanding local demand and supply dynamics, and effective property management. It's crucial to factor in expenses such as maintenance, taxes, and insurance, which can affect your net income. Additionally, leveraging mortgage financing can amplify returns but also introduces leverage risk. Despite potential challenges like market fluctuations and tenant issues, real estate remains a favored route for many investors due to its tangible nature and the control it offers over investments. With prudent selection and management, real estate can be a resilient income source, contributing significantly to your financial independence journey. Investment number 2, stock market, dividend stocks. Investing in the stock market, particularly in dividend-paying stocks, is a strategic path to generating passive income and achieving financial independence. Dividend stocks pay out a portion of the company's earnings to shareholders at regular intervals, providing a steady income stream that can be reinvested or used to cover living expenses. This investment strategy not only offers the potential for income, but also the opportunity for capital appreciation as stock values increase over time. The key to success with dividend stocks lies in selecting companies with a strong track record of paying and increasing dividends. Look for businesses that operate in stable industries, exhibit steady earnings growth, and maintain healthy payout ratios. Diversification across different sectors and geographic regions can also mitigate risk and enhance the resilience of your investment portfolio. Dividend reinvestment plans, DRIPs, further compound your investment's growth by automatically reinvesting dividends into additional shares of the stock, leading to exponential growth over the long term. While the stock market can be volatile, a well-researched and diversified portfolio of dividend stocks can offer a relatively stable and growing income source, bringing you closer to the goal of financial independence. Remember, patience and a long-term perspective are crucial as the power of compounding takes time to manifest its benefits fully. Investment number 3, index funds and ETFs. Index funds and exchange-traded funds, ETFs, offer a streamlined route to diversification and long-term wealth building, crucial for those aiming for financial independence. These investment vehicles pool money from many investors to purchase a broad portfolio of stocks or bonds, mirroring the performance of a specific market index, such as the S&P 500. The beauty of index funds and ETFs lies in their simplicity and effectiveness. By investing in a wide array of companies, you're reducing the risk of significant losses from any single investment. One of the greatest advantages of these funds is their cost efficiency. Lower expense ratios mean more of your investment goes towards growing your wealth, rather than paying fund managers. This is particularly important for long-term growth, as even small differences in fees can have a significant impact over decades. Selecting the right index fund or ETF involves looking at past performance, expense ratios, and the index it aims to track. While no investment is without risk, these funds typically offer a balance of growth and security, appealing to those with a moderate risk tolerance. For investors focused on achieving financial independence, index funds and ETFs represent a practical, low-maintenance strategy to build wealth over time, harnessing the market's overall growth while minimizing the risks associated with individual stock investments. Investment number 4. Bonds and fixed income securities. Bonds and other fixed income securities are pivotal elements in a diversified investment portfolio, especially for those on the path to financial independence. By providing regular interest payments, bonds offer a stable and predictable income stream, which can be particularly appealing during market volatility or as part of a retirement income strategy. Investing in bonds involves loaning money to the issuer, whether a government, municipality, or corporation, in exchange for periodic interest payments and the return of the bond's face value at maturity. Diversification within your bond investments is key. Government bonds are considered among the safest investments, backed by the issuing country's ability to raise taxes and print money. Municipal bonds offer tax-free interest income for investors in the United States, making them an attractive option for those in higher tax brackets. Corporate bonds, while offering higher interest rates, carry a greater risk of default, depending on the company's creditworthiness. Understanding the relationship between bond prices, interest rates, and yield is crucial. Generally, bond prices move inversely to interest rates. As rates rise, bond prices fall, and vice versa. This dynamic introduces interest rate risk, which can affect the market value of bonds. However, if held to maturity, investors can avoid market price fluctuations, focusing instead on the bond's income-producing potential. Fixed income securities, with their blend of stability and income, are indispensable for investors seeking to build a portfolio that supports financial independence. Investment number 5. Alternative investments. Cryptocurrency, peer-to-peer lending. The realm of alternative investments, encompassing cryptocurrency and peer-to-peer (P2P) lending, offers unique avenues for those chasing financial independence. Cryptocurrencies, with their notorious volatility, present a high-risk, high-reward opportunity, relying on blockchain technology for secure, transparent transactions. Meanwhile, P2P lending allows investors to directly finance individuals or small businesses, offering potentially higher returns than traditional investments through interest earnings. However, both paths demand a sophisticated understanding of their respective markets and inherent risks, such as market unpredictability for cryptocurrencies and the risk of borrower default in P2P lending. While they can significantly diversify an investment portfolio, they should be navigated with informed caution. In the journey towards financial independence, diversification stands as the guiding principle, spreading risk across various investment types to achieve a balanced portfolio. The blend of real estate, dividend stocks, index funds, bonds, and alternative investments like cryptocurrency and P2P lending can pave a multifaceted path to earning passive income and capital appreciation. It's essential to continuously seek knowledge, understand the risks, and align investments with your financial goals and risk tolerance. Financial independence isn't an overnight achievement, but a calculated, disciplined pursuit. Thank you for joining me in exploring these investment strategies. Remember, the path to financial freedom starts with a single step: education. Stay tuned for more insights and happy investing. If you're aiming for financial freedom, hit subscribe. Join us for more investment insights and tips. Thank you for watching, stay informed, and let's achieve financial independence together.